Hi, this is Mark. This is Monday the 19th of June 2023 when I'm recording this video. We're coming to the time of year every year when people ask me, are we in the summer range yet? What I'm going to try to do in this video is show you the clues to look for when a range is likely to start. Now, there are two big clues for the year. One is that there are usually ranges in the summer months. So for the Western Hemisphere, we're talking about June, July, August, and sometimes into early, even mid-September, because there are so many market participants missing that clearly the volume is down and things do tend to go sideways. Equally, Christmas time is the same, because for the month of December, many, if not most, of the big traders are away. And price often doesn't start going again till after Martin Luther King Day, which is around the 15th of January. So if you know in advance, it's great because you know you can go on holiday in August, or you can go on holiday all over Christmas if you choose. However, if you're going to trade it, I'm going to show you over this mini series what to look for and then how to consider to trade ranges. So this is the dollar index, and this is from Christmas time 2022, so that was price in a range from the beginning of December right through to the middle of January, as I've just explained. And this was tradable. I don't trade the dollar index per se, but this was trapped between a weekly 55 EMA and a daily 200 EMA, and price was simply bouncing off the top and bouncing off the bottom. And as long as this gap is big enough, this space, then I am interested in trading it. This is 220 pips. You would only require a small stop below the EMAs in this case and below the whole number. If I'm ever near a whole number and I'm going long, I always go 10 pips above for the entry. And if I'm going short, I always go 10 pips below. Often price will come up and not quite touch the area, the whole number, and promptly drop away. So here was textbook. This is the way to do it. Now, I would like more reasons for the stop, but on a simplistic level here, you're risking 20-30 pips, and this range is 200, so you have a 1-to-8, 1-to-10 risk-reward ratio. That will have made your money for the first quarter had you taken these during Christmas. Now, generally, I prefer to trade with the trend, so when the trend is going up, I want to buy, and when the trend's coming down, I want to sell. However, periodically during the year, as I've just explained, you can predict the summer months and you can also predict Christmas, but within every trend there are periods when price will consolidate. And for example here, this is June of last year. This didn't go on for long, but for 3-4 weeks price was clearly trapped within this range. Now here we're in an uptrend, and therefore my priority is to buy. Also, because I've got the weekly 55 in here and I've got previous major support and resistance going on, this one I would take 20. Now we need to go below the whole number, so we're looking at 40 pip stop, but a potential 220 pip gain, and that would have won on 2 or 3 occasions. Here you would have won on shorting, but there was nowhere for the stop, so I would not take it. Again, we have a mini consolidation period here. Here we were coming up, and this was March time 2022, major resistance, price is consolidating and bouncing off before setting off again. And then again, if we look on the dollar Swissy, this is the dollar Swissy, this was Christmas. The dollar Swissy is one of the big ingredients of the dollar index, obviously, but once again price was bouncing twixt the EMAs. Now when the space is not so great, then I'm not interested, but here it was still tradable and the risk reward was still in there. And last year, the summer of 2022 wasn't great for ranges. It was an unusual year, but then again we've been living through very unusual times the last few years. Here you can see that realistically from December right through to the end of March 2022, price once again was stuck in a range. Now I don't like this. I don't trade it when this is going on because we've got bunches of EMAs, everything going on, price slamming into things, and therefore on that occasion I wouldn't take it. Now, other clues to look for. So we know the time of year. Another thing you can look for are Bollinger Bands. Now, Bollinger Bands I don't use that often, and on the longer time frames they kick in far too late, and even this on the 4 hour for the Euro USD. When the Bollinger Bands start to close up like this, and even more so like this is a clue that price is drying up. Having said that, here for 6, 7, 8, 12, 15 days, 3 weeks, it had already started to dry up in here. So with the Bollinger Bands, I tend to look on smaller time frames. This is the dollar CAD on a 1 hour chart. And this, I class this as a never in a million years Bollinger Band. This is indicative of price drying up. Clearly, you can see for 24 hours it already had started. But this was a big clue that price was probably going to go sideways. And then as the Bollingers are horizontal, that supports the theory. The reason I class it as a NIMBY is that when price is coming up to here, and when also we have the daily 55 in here, the probability of this breaking through here is less than it bouncing back down. And when it's pointing steeply up here as well. So this gives me support here and it gives me resistance there to add to the theory of a range. However, for me personally, I don't trade small time frames and I'm not interested in a range of only 40 pips. However, if you do trade intraday and you're interested in smaller time frames, this is one way to look for the potential clue that we're going to go sideways, and then it starts to drift lower and lower. And again, we've just had another NIMBY here. Price once again started to consolidate. Here, it did do for the following 5 or 6 hours and then it's dropped again. Now, on a longer time frame, which I prefer, I look for areas now, this time of year. So now we're talking mid-June. I am looking for what is coming up next and where would I like this to bounce. And here on the CAD on a daily, I've got the 138.80 is the weekly 200 and the monthly 55. So here you can see this upper level has been made to previous support, and therefore support becomes resistance after break. So I am just going to keep my eye out for price to possibly start ranging in here for the next couple of months. This is the euro pound. Now the euro pound, this is another example. We had this recently. And this was an example that I didn't take. I said to my members, look, this is bouncing off the 55 and the 200 again, which is why I use these two EMAs. This is only a 40 pip range. And for me to place the stop 25, 30 pips away to win 40, the risk reward is rubbish. Leave it alone. What I did say is once this breaks and closes out of here, we look for the pullback to short, which we've just had. Once again, for the euro pound, everything is rolling over. This is a break of a highly significant area. If price was to start to bobble along here, I would then be interested to take this as a range trade as well for the summer months. Now this is the AUD. Now the AUD, let's show you the weekly first. This is spooky, and in part 2 of this mini series I have made a video just about trading the Aussie dollar on weekly charts, and weekly ranges on the Aussie dollar going back 10-15 years have been awesome. And we had a mini range, a bit messy, but we had one in 2020 here, but going back, and this was a range here, this was 2013, price pulled back to the 78.6 fib, 200 EMA, and it was bouncing off the 50. And this one, this was bouncing literally, and this was for 10 months off the 78.6 fib and bouncing back up off the 50. Now, we don't just use those two levels. We use multiple reasons as ever for entries and for stops and for targets. But that, we traded that in live. I remember doing this live with Mentor Pro members back in 2012. And then again, when we go to the 4 hour with the Bollinger Bands, you can see here that earlier this year we've had long periods of time when price has been meandering in these little ranges. Now these are little ranges. These are 60, 70 pips, but with big EMAs in the middle. But once again, if you trade intraday and you are looking for clues as to price drying up and going sideways, look for potential big areas, look for breaks of trend lines and then pullbacks, look for price slowing down, and look for clues from the Bollinger Bands. And in answer to the question at the beginning, when are they going to start? Nobody knows, but hopefully we're going to catch some of them. And just get in the habit of looking at the structure of the market all the time. We had a mini range here in September last year, and I seem to recall we had other one more recently. Where's it gone? Maybe a different pair. Now again, you look at the AUD at the moment, we're clearly in an uptrend, but we are having periods of consolidation along the way. In part 2 of this mini series, I will show you in much more detail trading ranges from those weekly timeframes. Don't forget to like and share this video, and if you've not done so already, subscribe to our channel. Catch you later.